All right. Well, good afternoon, everyone. Hope you're having a wonderful Thursday. Thanks for joining us here on another Traction Lab office hours. I will be flying solo this afternoon. JDM is likely on some fun Disneyland ride with Liam and Deb, so he's off there for a fun weekend. Or I guess it's a full week, and then I don't know when he comes back, but is enjoying the travels down there. So hopefully they're getting some good time with Minnie. And I don't know if those signature things or those signature books are still a thing, but if they are, getting all the signatures that are required. So I'm gonna get the chat warmed up. So let me find the LinkedIn page. But excited to have you all joining for another office hours. Again, we do have some pre-submitted questions. So I have about, I think, looks like I have 4 questions that have been pre-submitted. So thank you for submitting those that did. For all of you that are live here, feel free to hop in and ask away with any questions that you have in the chat. I'm going to be warming it up. So warming up the chat, and thank you for joining. All righty. Cool. So with that, I'm going to hop into this first question here. Just as a reminder, we have a little bit about the startup. So what type of startup are they building, who their target customer is, what their stage is, as well as kind of their core question. And then they were open to sharing anything else that we needed to know. So just for high level, here's the question they submitted, but I'll add the additional context. So this is a B2B SaaS platform that's helping small accounting firms automate client onboarding workflows. So their target customer is managing partners and operations managers at accounting firms with 5 to 20 employees. As it pertains to the stage, they're a pre-seed, so they've built an MVP, but they're running 3 unpaid pilots for 6 weeks. They're getting tons of feature requests and positive feedback. Their question is should I build the reporting dashboard feature that all 3 pilot customers are asking for before I start charging, or is it better to launch with what I have and build it after? That all said, the dashboard would make it a must-have. All right, and then some additional things was in terms of their pilots, again, they are unpaid. I'm adding that element. None of them have churned yet, but also nobody has asked about pricing or when they'll need to start paying. When I bring up pricing, they say, let's see how the pilot goes first. One firm's operations manager told them they would save them 10 hours a week, but the managing partner hasn't logged in once. All right. Love this question. So thanks for submitting, as well as just adding some good context for us to understand where you're at. So I think the first thing, you're always going to hear this from the Traction Lab is going down the path of unpaid pilots is a big risk. We recognize there's times that's required. But one of the things that we're doing is we're pushing off that risk related to the desirability of what you're creating. And if they're not willing to pay at this stage, we're taking the bet that they will later. And so you're going to continue to likely build their feedback in with customers that might not ever be paying customers. So there's some risk there. So I would if I would go back, I would front load that and try to see how you can have that conversation earlier. But in the case right now, you're asking the right question. So again, that question being, should they build the reporting dashboard feature that's been requested by the 3 pilot customers, or should they start charging before? You're going to hear from the Traction Lab, push that conversation to have what their willingness to pay is, and will they actually pay before you build it? Because again, you're just pushing that risk off. So you did that in setting up the pilot. So now let's maybe go back to the drawing board and bring in the payment component of the pilots currently. So I would definitely recommend coming in, trying to put that offer in front of them in terms of what you're charging them. Or if you're going to go through the process of building it out, is identifying what are the bounds of the pilot. So saying, based on the pilot, it's currently X. We're going to give you this set of features, but if you want to become a paying customer, we're ending this pilot period in 2 months, or that's probably too long, but say in 1 month. And so if you've hit this value, we've saved you sufficient time, X, Y, and Z, that is your core value proposition, it sounds like, then they should convert to being paying customers. So I'd put some bounds on it, and then that actually becoming a trigger for them to start paying. On the other side of this, one of the things that stood out to me, and I'll reread it again for those that are hopping in, was when pricing gets brought up, they say, let's see how the pilot goes first. So again, they're kind of hesitant on some of the value creation. And so the promise isn't even strong enough for them to dive in. They want to see if the value comes. And so again, that there's some hesitation there. And then this one firm's operations manager told them that they would save them 10 hours a week, but the managing partner hasn't logged in once. And so one of the things we need to identify, which we've pushed off in terms of this risk, is who is the economic buyer? Is this the operations manager, or is it the managing partner? Right. And so if it's the managing partner and they haven't logged in and they're like, yeah, it's great, it saves the ops manager 10 hours a week, but they're not actually able to do anything major with that 10 hours. Are they spending that 10 hours doing something else, or just they don't have anything else to do? And so what's that value creation back for the company? So that's a key thing to be thinking about. So who is the economic buyer? Who's the user in this situation? And so the kind of way I would maybe summarize this is we often see this as the feature request trap, right? So you go down the path of like, okay, well, we'll build it and then you got to pay, versus front loading that risk of saying, hey, we'll actually pay you, and then you go build it. Because if they're just throwing it out as a feature, it might be a distraction that then throws you down this loop of you spending more time and money working with people who aren't actually your customers. So that will be our first question. So again, thanks for the pre-submission there. If you're in the chat or you're here watching, would love to see what questions you all have. So I will be taking live questions and prioritizing those. So throw those questions in the chat. Let me just, those questions in the chat. Does this, maybe I'm testing to see if it works. So maybe if you're out there, respond that it works. Your chat works. But would love to get what questions you have live. But I'll move on to the second question here. So I'll submit the anchor of the question, but we'll add additional context as always. So again, this is it's a mobile app that helps college students find and book study spaces on campus in real time. Their target customer right now is undergraduate students, starting with one campus to prove it out. Okay. And so in terms of stage, they're at the idea stage. They have shared that they validated the problem through 50 customer interviews or more. They've built a clickable prototype. They haven't written any code yet, but have pre-launched a waitlist of 847 students. Okay. So the question is everyone I talked to said they definitely use this and the wait list is growing organically. Should I focus on fundraising first to build this properly, or bootstrap the MVP and prove the traction before raising? Investors keep telling me to show traction, but I feel like I have it with the 847 signups. All right. And so the anything else, so they're planning on monetizing through campus venue partnerships. So commissions on booking, commissions on the bookings, plus premium student features. So they haven't talked to any venues yet, but because they want to show that they actually have student demand first. One of the co-founders thinks they should raise $500K to hire developers and launch at 5 campuses simultaneously. So I think the big thing that I'm seeing here is, we have the distinguish between what we have as the customer and user. So in this case, there is a path to monetizing the students, but you're pretty clear in your business model that you're going to be charging the venues for the bookings and all of that. And so, I recognize that this app is kind of serving as a marketplace or platform facilitating those connections. And so you have kind of growth on one side, but you don't have yet the other. And you really need to prove that you have the other in order to actually facilitate these transactions. And so I think we're kind of seeing this sign up list, which is great that it's growing organically. I would love to learn more about like how they're finding you. So is it like other people are referring it, or are they seeing you somewhere that they're actually, landing on your landing page or whatever that might be that you're converting to this sign up. But I think we've pushed some of the risk off of who's actually going to facilitate that transaction, and that being the booking. So if they don't really actually care, maybe they're booked all year round and doesn't really matter to them, that they're not willing to pay for that service, then we've kind of created a one-sided market and we don't have the other. So I think we definitely need to go out there and start prioritizing conversations with campus venues and these partnerships. Additionally, if we're thinking of this upside, I think we're pretty far away in delivering just even the baseline value to these students. So I think there's some promise they're excited about. You have some great wait lists, but I think, again, what are they actually waiting for on the wait list? So is it that they have a premium spot, or that they're actually going to be paying as a user to be on this? Because I mean, many of us sign up for with our email to say, hey, we're interested, but we never really have intention to utilizing the things that we sign up for. So I'm just, again, we don't want to couch that wait list as product market fit, because we don't have the other side of the market. And really the core value and the way we would make money, again, in leading the startup, is facilitating those transactions. So I think there's a gap there. The last thing I would highlight is, should you raise 500K to hire developers, and kind of this thought process of going into building the full-fledged version. I don't think we're ready to build it yet, because we don't have the other side of the marketplace that will fulfill the need of these students. So I think we need to go get some validation, get them onboarded, see how they plan on utilizing it, and is there actually enough supply on that side to support the demand that you're generating from the students. And so I think from the 500K, I mean, it doesn't hurt to start having conversations, but I think we're far away from closing that initial round of financing. And then the last piece of feedback that I always share is, like, as we think of like the capital raise, specifically just to hire developers and launch 5 campuses simultaneously, like, where does that get you? Are you generating revenue, or are you just building additional wait lists, or like what's kind of the core pivot point or inflection point that you're hitting related to the venture? And so starting with that, the capital is going to get you to that point, and then you're able to continue to grow from there. So that's kind of all I have for that. I think the way I would, we like to, put some color on some of these ideas. And so where maybe I'd think of this one as what we call like the product market mirage. So we're seeing this demand happening on one side. And so it feels good that we're getting some, quote unquote traction and building this wait list. Again, I think there's, as we peel back, is like, what are they waiting for? And then we also have this gap on the other side of, are we actually getting the supply that's needed to meet the demand that we're building? So that's all I got there. I'm going to respond here in the chat. So thanks, Sharif. Glad it works, and thank you for being here. So if you have questions live, again, happy to take those as they come in. I will prioritize those over the pre-submitted ones, but we'll be sure to get through all of those. Again, we have had 4 submitted, so I've gone through 2 of them. So we're about halfway through. So want to make sure you get your questions answered. So if you have one, throw it in the chat. If not, no worries. I will bring up the next one here. So gonna throw this one into the chat. So that's what's your question? And then in terms of the context here, so what kind of startup are they building? It's an AI-powered compliance training platform for healthcare workers. Their target customer is nurses and medical assistants at mid-sized clinics. So they're targeting clinics that have 100 to 500 employees. In terms of stage, they're pre-seed. The product is built. They have 12 nurses using it daily across 3 clinics. They say they love it. Their net promoter score is 72, and they're trying to convert pilots to paid. So you know I'm likely to come back to that. And so their question is the nurses keep telling me this is way better than their current compliance training. Usage metrics are strong, but when they ask them to introduce themselves to whoever who makes the purchases, they ghost them and say our director is super busy right now. How do I get past the blocker and how does this founder get past that blocker and close these pilot customers? Really great. And so the anything else is their pricing is currently $15 per user per month, which seems like a no-brainer compared to their current $40 a user a month vendor. So they've been focused on making nurses happy because they're the users and they figure if they love it, selling to leadership would be easy. And then the technical co-founder wants to build an admin dashboard, but I think we should focus on user features that create more viral adoption first. So very good. So I think again, just gonna always point it out, but not gonna belabor it this time. Is this is the challenge of setting up unpaid pilots. Is you're having to go back and try to figure out these particular things. So we're trying to figure out in this case who is the economic buyer. We kind of generally know we called it leadership, but is that the operations person? Is it the owner of this? Is it a director? So I think figuring out those key things and we when we push for a paid pilot, we front load that type of conversation to figure out who that economic buyer is. And so we've had some good positive momentum with our user side of the tool, which is great, solid, net promoter score. But again, we've used this framework we call a team where part of like their engagement, even if they're not able to ultimately pay for it, right? So in this case of the user, they're not really pushing forward and showing traction related to them dedicating more time. So that being like, are they willing to go try to have a conversation with this leadership? Are they willing to actually make that connection happen? And so they're kind of pushing this off the front of their desk and saying, hey, the director's too busy. Well, that's the challenge we see when we have like a high severity problem. So, hey, this is a big pain point for the nurses. But and maybe the director has some severity related to that because they obviously need to have the compliance training, and it might save some dollars. But in terms of the urgency, there's other priorities, other fires that director is currently facing. And so even though the nurse is getting quite a bit of value, it's not enough value currently to even have them go advocate and like move this to the top of the list for the director. So that's a big challenge I think you'll have to overcome. So I think part of to your specific question of how do I get past the blocker and close these pilot customers is creating more urgency. So if you say, hey, you're gonna turn off their opportunity to use the training, does that force their hand to say, hey, I actually have to go really push this forward to these directors engage? And so I think that's one component. And then if you're continuing down the path to add more pilots, front load that conversation and make it a paid pilot. So then you're actually able to get in front of that economic buyer before you move forward. So the last thing I would say is, it seems like you're creating value for the nurses. They're going to care probably less about the decrease in price, right? That's more of a value prop to the director. But how is the director's life better outside of that, right? And so when we think about, that's a pretty significant cost savings, which is nice, but there's a lot of time and energy that might have to go into that. And so are they getting their full leap in value along that process? And so we have to look at other costs that go into it. To change vendors, there might be a whole set of paperwork and things of that nature that just one continues to put it at the bottom of the list, but also is an investment from the institution or organization to bring that solution to reality. So as we kind of like, if I was to couch this as, one kind of label, we call this the like economic buyer blind spot. So we're like, hey, we're going to just get this in the hands of users. They're going to be able to engage and they're going to get value from it. But then kicking that can down the road of who is actually paying for this solution, which is a big risk. Awesome. Thank you, Shauna, for the question here. So I will put it up somewhat on here. I know it won't fill the won't show the whole thing, but got you on screen here. So hey, good to see you. So there. Shauna is building Starseed Quests, a movement-centered platform for kids and families that blends emotional intelligence, nature-based quests, and spiritual tools to support emotional regulation and inner growth. Um, she's completed a pitch deck and launched their first digital mini quest, now programming for beta testing with families and full pre-launch campaign this spring. The main question is about sequencing. What's the smartest way to map my pre-launch into proof that gets us to product market fit, especially before I build out more tech or consider fundraising? I'd love insights on milestone mapping and how to shape into early traction investors would recognize. Awesome. So this is a really great question, and love how you're kind of focusing in on this sequencing. That's a term Josh and I often use here at the Traction Lab. And so one of the big things is we think about sequencing. It's all about what we would say is, how does your customer go from stranger to having success within your venture? And so, some high level steps that they can look at, and we call it kind of the traction path, or your sequencing of going from stranger to actually getting success and expanding within your ecosystem of your offering. And that's when you actually, like, when you have a repeatable process, that's when you have that product market fit, where there's actually like, oh, I can start fueling money into this engine, and now we're going to hit scale. And so it's okay that we're not at that point yet. We want to be able to build that repeatable engine, and repeatable, components are based on evidence, and ultimately this predictability that we know is going to come. So we know these core steps, and that when we are talking to our customer, or we know that if they come into our ecosystem, they have a high level of conversion, or if I run this particular ad, I'm going to get in front of the right person that's going to convert and then grow within that. And so I'm going to try to see if I can share a slide here real quick. So it's testing my Restream abilities here. So I'm going to give it a go right now, and I'm going to share my screen. So allow, select a tab, go here. So I think I should be sharing the thing there. So this is what we call the steps to the traction path, or really as we think about sequencing. And so how the sequencing being from our customer being a complete stranger to then them getting value and growing within our ecosystem. And so it starts with an understanding of the awareness of the problem, right? So when we think of that early adopter pyramid, it starts at the bottom as they have the problem, they're aware they have the problem, they're actively looking for a solution. They then move up that, and they've maybe hacked together some sort of solution themselves, and then they've acquired a budget to it. And so we want to be thinking about is, when does that awareness of the problem take place? And so that often comes around what we call a triggering event. So something happens. So what happens to that customer then to say, hey, we now are motivated to actually solve this? And so when that triggering event is, they know they have the problem, but then there was this expectation violation that then brings this awareness around that severity and urgency, right? So they now have the problem is not just something that's on their list, but it becomes number 1 or 3, and it's a big pain point for them. So it has that high severity, high urgency. Then what's their process for discovering the solution? Are they, Google searching it? Are they calling a friend, right? We need to understand who our customer is and the nuance behind that. So if they go on Instagram and look up influencers and see how they're solving for that problem, or do they call their best friend who's been in that space, right? And so we need to understand what that solution discovery looks like, and what terms and language they're looking for, and what value is ultimately they're trying to be derived. Then they move into what we call evaluation. So, what's their process of evaluating you against other solutions? So, likely they've already tried some sort of solution. And so there's something maybe missing related to that, because we all are trying to solve our problems in some particular way, but they're not doing it in the most optimal fashion. And so, what are the criteria and outcomes that they're looking for in that evaluation process? And so, one of the ways I would visualize it is, we talk a lot about that like X and Y axis. Your goal is that you're providing benefit one and benefit two, that your competitors are not providing. They're either providing benefit two or benefit one, but not both of them, which your ultimately aim is to target and solve. And you want to stand out in that particular way. Then we get into what is the commitment. So are they signing up for a monthly subscription? Are they signing up for a year-long subscription? Are they signing up to demo it? Like, what is their commitment? And then what's the implementation process? So is there a lot of onboarding, or is it pretty seamless process for them to get started? And then what's that point of them actually realizing that first set of value in that process? And then how do they expand that value? So that being for them personally. So do they have an ability to go from a regular user to a premium user, or for you, how do they expand in terms of, are they providing referrals, or how do you retain them as customers going forward? So that's kind of what those steps look like. And I'll try to see, I'll go back here. So I think that will eliminate the share. But that's kind of when I think of like sequencing, that's really what we're really focused on. And so hopefully that added some context to that part of the question. And so when we think about this process of getting to this point of needing to demonstrate forward momentum around fundraising, right? And so they're going to be less focused on the tech component of things. They obviously want to understand how the tech works and that it will deliver that value, but they're going to be more interested in your ability to demonstrate true demand, and that being actual paying customers. And again, we think about traction as a ladder. So it's not, moving up that ladder is certainly an element of, hey, we have paying customers. That's awesome. Above that is going to even be, solid unit economics. So thinking of, is your cost to acquire a customer connected to the lifetime value of a customer, and does the math behind that make sense? Because if it costs us so much to bring in a customer and then they're not in our ecosystem for very long, to even pay off the amount that we invested to get them into our ecosystem, then that won't be worthwhile. And then on the bottom of that is, do we actually have an interest and engagement related to, problem resonance, and that this promise of what we offer will be key going forward. So those are kind of the ways I would approach it. I'm going to go back here real quick and see if I missed anything or need to add in. If I did, it might be quicker if you just throw in to the chat. But the main question is about sequencing, which I hit on. And that's how I would ultimately map it out, is kind of going through those steps and understanding how your customer goes from stranger to expanding within your ecosystem, or expanding your value as well. And so I think the biggest thing is we don't want to build up towards this just big launch, right? We want to have this iterative process. And so if we're launching this kind of free thing, we're not sure if we're launching with the right people and creating the right value, because we want to connect value to them, to us also capturing that value back. So that would be one component that I would highlight and dive into. And then in terms of milestone mapping, the way we've kind of focused in on it is, the first kind of, we call it validation point, is, do we have the evidence related to an urgent problem with a willing buyer? So if we don't have that, then we're not really, headed in the right direction, right? We want to understand that there's actually this true evidence related to, hey, there's a problem that's out there that's severe and urgent to the set of people, and they're willing to put resources to solving that problem, right? That's the first set that we want to tackle. Then we transition, that's kind of the customer discovery, into then you diving into more of that customer validation. So is there that transition from willingness to pay to then this being the right solution that they're actually paying for. And then we get into some of that unit economics going forward. So is there actual path to scale this because the engine's actually working in your favor? So that's I think all I've got there. So great question, and I love everyone hopping in there. So hi Brittany, thanks for joining. And yeah, sorry JDM's not here, so you only have one redhead here today. But hopefully I'll bring equal amount of energy as both of us do. And then Shauna, thanks for the question. If there's follow-ups related to that, happy to dive into it. But with that, again, if you're just hopping in, we are taking questions live, and happy to answer them as we go. If there's tools or things I need to pull up, then I'll try to find the right resource to share. But I'm going to move to the last submitted question. So I'll throw that question in the chat. And again, as always, we'll dive into adding some additional context. So this startup is originally a social marketplace for home chefs. They're now pivoting to a ghost kitchen fulfillment platform for restaurants. Their target customer is independent restaurants looking to expand delivery without opening new locations. They think this is better than the home chef thing that they had originally worked on. And so basically the stage that they're at, it's idea stage. So they're headed in this new direction. They've spent 8 months building the home chef marketplace. They had 43 chefs sign up, but only 6 ever posted dishes. And they got maybe 2 orders per week total. They decided to pivot after talking to a restaurant owner who said ghost kitchens are the future. I think I sent the stage. I didn't send the question, so my apologies. So it should have been, this is the question. So the question is we're convinced the ghost kitchen angle is way bigger opportunity. Should we build a new MVP from scratch or try to retrofit our existing platform? Also wondering if they should tell pre-seed investors we're pivoting or just quietly making the switch. All right. And then anything else we should know? So they haven't actually talked to restaurant owners systematically yet about the economics, but the economics seem way better. Restaurants have real budgets, unlike chefs. Their advisor, who comes from a fund, says ghost kitchens are super hot right now, and we should definitely pivot. They have only 4 months of runway left. All right. And thanks for the questions and comments in there. So I'll get to that question just after this one. So I think the big thing here is, right, we have a data point of this one chef who said, hey, ghost kitchens are the future. And now we're kind of taking this huge pivot to say, hey, we had one piece of data that said we need to really shift. Well, you had 42 other chefs that have signed up. Yes, I recognize there hasn't been a ton of posting or orders yet, which definitely has signs of okay, maybe you're not generating the value, but maybe there's the one other side of it where you're not getting as many of the people that are interested in ordering through that. But I think the biggest thing here is you got this one data point. Let's go back and talk to the chefs that are on the platform and understand a bit more about their usage. Are they getting value? Are they not getting value? What other things are they seeing? And I wouldn't go down the path of biasing of tell us what you think about ghost kitchens, because they might think that that's the future, but that might not be the intent or main thing that they're focused on. And so we got this one data point that it seems a little bit as a distraction to then go make this huge pivot. And I recognize you have this pressure and urgency of, hey, you have 4 months of runway left. You want to use it in the right way. But making a big shift and a big bet to then go build an MVP based on this small piece of data and one advisor saying that's a hot area, I don't think is the right move. How I would approach it is go back to those 43 chefs, do some discovery conversation, see if there's validation of their willingness to sign up on this, and move forward. And so to the question here from Brittany, are you helping the chefs with the making of their food? That's a good question. it's a marketplace for home chefs now pivoting to fulfill ghost kitchen fulfillment. So I think it's that they're actually helping them uh like order goods. So it was like these home chefs that are trying to like buy goods through this platform is how I'm taking it. I'm not super clear, so I can see if you're confused as well. And so maybe that's, overall a messaging thing related to the startup here. There's not a ton of clarity, but I think the like biggest thing that I just want to highlight again is that we don't want to just go off this like one person saying we need to go do this. But yeah, I don't think they should just drop what they've built. I think they should validate and understand the need of the chefs. And what they might hear is like, yeah, the ghost kitchens is the way of the future. But like, what is the problem they're trying to solve within that particular space? So I think going and then gathering some of that evidence and validation related to that new offering before you go build it. Lastly, is definitely communicate with your pre-seed investors. They're going to be pretty taken back if you did this big pivot and then burned all your capital and didn't make forward progress in this idea. And part of the reason I say that is, if you're an entrepreneur, this might not be the successful venture, but you might just have burned opportunities for raising capital in future ones versus communicating the evidence of why you're making this pivot, why this makes sense. That might then also position you like, hey, if I get this level of evidence, I think we should double down and grow down that path. And so you're keeping them in those conversations going forward. So that's what I would recommend focusing on. So awesome. So I'll bring up Sharif's question here. So thanks for hopping in with this question. So it says, hi, Cameron. If you wanted to convert an unpaid pilot into a paid engagement, how would you approach that conversation? How do you determine the appropriate pricing for a pilot? So really solid question. So I think, a core component of transitioning to from an unpaid pilot into a paid engagement was one, just understanding what was the framing of the pilot in general. So were there terms to the time? So if there wasn't even any discussion, it's like, hey, just we'll let you use it for free, and then we're going to have that conversation at a later date. That's going to be much harder to like break into that conversation. Versus it being like, okay, we said you could utilize it for free. Didn't really have any price in mind, but want to have that conversation. And so, maybe you start the conversation of, hey, we're looking to, understand how you're utilizing and, if you're finding value from this particular offering. And then, part of that conversation is, we're approaching the point of, looking for turning these unpaid pilots into paid pilots, and maybe it's that you're converting them into paid customers, but there's a discount period that you're providing for being an early customer. But that would be a core component of it. In terms of pricing, pricing is always a sticking point for many things. I wouldn't like discount it just because it's a pilot. Like you want to, again, an MVP and them actually getting value out of it. Like if you're creating value, there's no reason necessarily even to discount it. That's usually you trying to navigate some sort of fear or thing you're working through. But some of the ways we can look at pricing is, one, understanding what are the market dynamics currently. So what, solutions are out there and what are their current pricing strategies, or what's the price that they're aiming at it. But I think a more impactful approach to it is, what is the cost of this problem to them currently? So are they currently using a solution or a set of solutions that's unoptimal or not as good for them, and so they're paying X already to try to solve the problem, but it's not really working to the best fashion. And so you could partly understand like, hey, how are you solving the problem now, and what are you paying for that? Additionally, sometimes it's not direct cost, but it could be someone's time or a certain amount of energy, and so they're tying like, hey, this currently costs Cameron 20 hours a week, and you can then say, okay, well, Cameron's hourly or salary rate is X, and so they're currently paying this to solve that particular problem. And so you can understand then how you're creating or fitting into that landscape. Lastly is just, what is the value of that outcome to them? So again, if it's cost savings, that's pretty clear. If it's, hey, this is going to generate new revenue and opportunities. What is that worth to them? So like if it's like that's going to unlock, $10,000 of new revenue each year, like maybe they might be willing to pay $1,000 a year because it's a 10x return on their time, right? Or their investment in that particular solution. And so it all goes back to understanding the value we're creating and the problem that we're solving, and how big is that problem, and how much value are we creating in that process. So and then we can use the current economic market landscape to help in that process. But I think you are highlighting a interesting point of like, how do you start those conversations? But I think part of it is not to come across probably too salesy, but more of like, hey, we've been working together in this pilot for a while, and we would love to learn more about how it's working, what value you're getting, and then also broaching that conversation of, hey, we have a set timeline of where we're converting our pilot customers into our pilot users into paid customers, and this is kind of our strategy and what we're looking at. And part of that could be just an open dialogue to see what that looks like. I think one of the big things that's been common in the questions that we got was, a core component of it is sometimes the person that's using it isn't the decision maker. And so what we might then learn is like, oh, well, you need to go talk to this person. Well, okay, that's the person, that's the economic buyer. And in the terms of how we looked at that sequencing, that's how the decision making is taking place. That's the evaluation period. Who needs to be a part of that evaluation and that decision making? And so if we're just continuing to push that off, we won't really ever know who we're targeting going forward. So hopefully I didn't speak too much past the question there, but really like where your question's at. Terrific. So in terms of Brittany, your question, we're not helping chefs market their food. This was just a question that came in that was submitted prior. So I think they were just looking to, learn a little bit more about as they pivot. So that founder, I don't believe, is actually here. They submitted ahead of time, so then they can come watch the recording and get the feedback. But other than that, they might need marketing, and they'll be able to read the comments to see if they can get some support from you. So with that, I don't have any more pre-submitted questions. I'm happy to take some additional questions. I'll kind of do a quick filibuster here as we get to the end and the LinkedIn catch up with me here. But of course, happy to support. Great question. Appreciate you being here. And so I think with that, I'll maybe kind of wrap for one more moment here, see if there's any more additional questions, comments, or concerns. But I think the biggest thing is, continue to plug in. So we are going to be continuing to host these office hours. So exciting to see many of you here. Great questions and engagement in the chat. So really do appreciate all of that. It makes it so much more fun for us here. Additionally, feel free to plug into kind of our Traction Lab ecosystem. So we have a weekly pivot that goes out on Monday called the Pivot, and it brings in one anti-pattern for founders and how you can start to tackle that. Additionally, we have our Traction Lab podcast, which drops every Saturday. So do subscribe to those. We would love to have you continue to plug into the ecosystem and get value from all of us. But with that, thank you for being here. Thank you, Brittany, as well. Appreciate the questions and engagement to all of you. But with that, have a great rest of your Thursday. Have a wonderful Friday and weekend, and we look forward to seeing you next week. So with that, we'll see you about the